The reason why I wanted you to come in is I've done a transaction with you and your team last year.
Yep.
And over the last 5 years, I've been more and more active in commercial real estate. And I've really noticed that from one deal being presented to the next, the ones that come from you are really, really clean, meaning the data room's perfect. The presentation's really good, like sometimes almost too good. Like it's super quick to get to the point. And so over time, like there's always been a reference point in my mind of like when a deal comes from Sinnett, Gaddy, Avison Young, I know that I'm gonna get like a clear picture, and it's really stood out to me a lot, especially in these last months because I've been kind of deal hunting more, turning around each stone, and I've noticed just like the data rooms are never clean. The deal's like super muddled. You find out about things late in due diligence. And then last year we did one together, near,
Alexander does have.
yeah, nearby, and it was just so clean, and the process was so simple. So that's why, like, I told
Thank
Kyle that I really wanted to talk to you. And so, from what I understand, you've been on the selling side of over 800 transactions.
Yeah, I think we're probably close to 900 by now, but I've been a commercial real estate broker for almost 25 years. Started in late 2001, 2002. Did a bit of retail leasing at the time. That's really where I started, was actually at CBRE doing research and whatnot. And I've been a commercial real estate broker ever since. Never, on the ownership side. I've been to 3 different shops. And I think, what I can say to your point, and it's funny because this came up actually just yesterday in talking with a potential seller. They came to us last week, showed us their property that they're thinking of selling. And then I got an email, I think last night, saying, are you ready to list it? I'd like to be on the market on Monday. And I think to your point, PJ, is that what we've learned, and particularly I've learned, which we've instilled in the team in over the last 20 years, is we're not there to just list the property. So before we want to take it to market, we really want to understand, why someone would want to buy this. And we'd like to guide the potential purchaser how they can create value or why it would be a good fit for them. So I think to your point, we try and go beyond just listing it. And I think there is that perception out there. And, maybe some of the other groups that you'll work with, you'll find it's more they kind of just listed it. They're a marketing vehicle, but they don't really fully understand, or haven't really taken the time to fully understand, what are the intricacies of the property. And I think I've seen, over the 900 transactions where we've seen clients have success. And I think in a lot of times it's not necessarily focusing on, simple metrics like the cap rate. The cap rate is for today, doesn't guarantee that the cap rate will be there tomorrow or that you'll achieve that.
So you're not just taking his info and dumping it into a data room. How much work goes into prepping your files? Because there's also the thought that I came across was you guys only work with the top vendors, and so they're super organized.
Yeah.
Like, is it?
No, I would say it's surprising even how some of the most sophisticated owners are not organized. And that could be for a multitude of reasons. Big organizations compartmentalize different departments. Not everybody communicates internally. When you think of a smaller shop, it's much more cohesive. As you become larger, you have to silo and segment and, create divisions. And that can sometimes, on the opposite side, make things less, more dysfunctional or less cohesive, if you will. I would just say, so the information we get is always, sometimes it's very good, sometimes it's all over the place. We just take the time to really focus on underwriting it, analyzing it, understanding how to create value. That's always how we think about it, is if we bought it, today, what will we do it? And I'd say the biggest misconception, and, I hear this a lot is, I want an off-market deal, or, why don't you bring it to me first? And oftentimes what I will tell you is a lot of the work that we do, which I think sometimes goes unnoticed, is, we really work with the vendor. One, to try and bridge the gap between what I would call their personal valuation, or the valuation that they believe their asset is worth. And then the second thing we a lot of times work on with them is understanding the difference between, what a marginal buyer would pay and what, most buyers will pay. And by that, sometimes you'll hear someone will say like, "Oh, yeah, but you could add 3 floors to my property."
Yeah.
And you're like, "Yes, but, only a marginal buyer would buy a building with tenants that's existing and consider
Yeah, yeah.
adding more floors to it." Most buyers will buy it because of the revenues in place.
If I look back at, let's say, a year and a half ago, like, I'm learning, I'm still new in this. A year and a half ago, like, the segment where I would place you in was, okay, these guys sell retail price. Like, the
Yeah.
full price, they're there. And having worked through a scenario and worked through so many scenarios where the vendor has an unrealistic price point, now I'm actually like, I've reframed it where it's like, they also work to make sure the buyer's expectations go,
Seller's expectations, yeah.
yeah, sorry, the seller's expectations meet something that's reasonable.
Yeah.
So I have a lot of scenarios where either it's a direct with the vendor or through an intermédiaire, and they're not able to give that cold shower to the vendor. And so I saw it in our transaction where it was like, I was like, "Oh, okay, this must be the retail price." And I was like, it just doesn't work. Yeah. And then your team kind of went back and forth with the vendor, and Seb did an amazing job to bring it into something that does work, and the deal happened. So it went from being like, you guys are like the retail price, to being like, actually, like, you're transactional. Like, when you list something, it may take time, but I always see the follow-up email of like, it went through.
Yeah. No, we focus on, like, I would call it market pricing. So again, we're not trying to hit a pricing solely because the vendor has expectations. We're not there to waste your time. We're not there, and I also like to say, like, right now, we're not looking for marketing. So when we work with a vendor, it's because they're a real seller. And they're not just testing the market. And again, it goes back to, we're not, I'd like to say we're not a listing service. We're beyond that. We're really there to help guide the vendor through the sales process. We're obviously going to ensure that, they do achieve fair market value. And, I think what I can comfortably say now, after over 900 transactions, um, a lot of the clients that we worked with, once we sold it to them, like, we saw whether they succeeded or whether they struggled with the property. And, I don't think we would, personally, I don't think I would be doing this after 25 years if every building I sold was at a price that, no one could have any success with. I think at a certain point, the more you realize there's a lot of assets that we sold to somebody and then they came back and they did very well with. Um, so I think it's the key to success, and I think the service on both sides that we like to provide is really to ensure that you're getting a fair deal as a purchaser. Maybe you'll hit a home run, but it's not going to be because we mispriced. And I think on the other side, we're not going to sell a building for on behalf of a vendor where, they got a price also that, like, was out of market, and, they fleeced the
Mhm,
purchaser.
mhm.
We're not in the business for that. We're there to really ensure that both parties, get what they paid for, so to speak.
Especially because at the size of transactions you're doing, I'm guessing most of your buyers end up being repeat customers,
Yeah.
and most of your sellers also end up being repeat customers.
Yeah.
So it's, like, important that there's actually long-term success. Over all this time, has it happened that you've sold or you've been in a transaction where you could tell the buyer wasn't really built for this?
Yes, more and more. And, that kinda goes back to when we're talking to somebody or we're pitching a deal, we're trying more and more to identify a buyer that has the right profile, whether it's the right expertise, whether it's, the right competitive advantage that'll allow them to execute. Again, if we, um and I think I've learned this you know, um, through all the deals, but one in particular that kinda comes to mind, I would say I think in 2010 or 2011, we had a building for sale. It was a small-ish office building in Drummondville, incredibly well situated, great tenants. You had like Wawanesa, you had a major bank in the building, and the property was about 97% occupied. And, we sold it to someone who was kind of pivoting from, the business that they had been successful in. They wanted to invest in real estate and start a little bit of a real estate business, but had very little experience in it. Um, and sure enough, when we sold it to them, as I said, it was about 97% occupied. It was kind of unfortunate. But the seller was from the region, and part of the success of the building was the firsthand relationship that they had with the tenants. They were very hands-on, and we sold it to someone who was based outside of the region, who is new, not very connected within the community. The original seller had gone through the trouble of, he would donate to certain foundations, he would show up at certain fundraisers and really built, you know, put himself into the community. And a lot of the tenants chose to be in the building and thought because of the community aspect. And so when we sold it to this person, from a financial perspective, it was a great deal.
Mhm.
The part that, again, in hindsight, we couldn't foresee was just how sticky the tenants were or not based on, kind of the relationship or the culture that the vendor had built. And, and it was to the point where, a lot of the tenants had been there for 20 years on 2-year leases. They hadn't, it's not like they were signing 10-year leases and there was no need. And it was seen as a benefit because every 2 years you could kind of redo the rents, keep the rents growing. So it all made sense on paper. And then, as I said, as of today, I don't think the building is more than 75-80% occupied. And they've always struggled. And the message we heard in the marketplace was just, well, it's not like we're going to go where we're known, like, and trusted. And we want to work with people from the region.
So basically, the guy was hands off, sold his medical clinic, then tried to get into real estate, but wasn't really involved.
No,
And
they
it
were
just kind of tanked.
managing it from a distance.
Yeah.
And it was not the right property. Like we should have, that's where maybe a freestanding, pharmacy with a 10-year lease where, you could be on your yacht in Monaco and still get the rent was probably the better investment for this buyer's profile.
He was looking more for, I guess, pure passive, and then
Yeah.
this had a little bit more of a local flair to it.
And again, you had a cleaning person on site, so you had a supervisor. You could do your accounting from anywhere and your payroll and your deposits. So it's not like the management was necessary to be there, but the success of the building really was built on kind of the community and the culture. And in a small regional market like that, it can make all the difference. So, those are unforeseen things. And it goes back to, in hindsight, we should have sold, I think someone that would have been more present in the community. Maybe had seen it as an opportunity to buy 2 or 3 more buildings and really become a bit of a player in that region would have probably done better.
Yeah,
So, but again, the math at the time still
it
worked.
was good.
Yeah.
It's funny because for me, when I think about a scenario like that, office building, 97% occupied, I do value add. So me, I'm kind of looking at it, I'm like, how really can I make it better? The upside is capped, and then I always think of what's the downside. In
Yep.
this case, the downside is 97% can go down, right? Like
Yep.
things can happen. So then you take out the bank and the Wawanisa, and then I guess you kind of identify that 30% local mom and pop business, the notary or the lawyer.
Yep.
So yeah, I wouldn't touch that because I'd be scared of not being able to maintain what the previous person had. On the flip side, though, um, I guess if you do get a great price and it's fully stabilized, then it's like a cash flow. But I'm curious, like, because you guys often have value add multifamily.
Yep.
Has it ever happened where, this guy, this vendor knew he wanted to be passive? On paper, he bought a stabilized property and then, did absolutely nothing. But has it ever happened that you've sold a value add and then years later you see that they're still struggling with getting the work done or they don't know what they're doing?
Yeah, I mean, we definitely do see, and it kind of goes back to the same thing. It's like, do you have the right team? Do you have the people behind you to execute? And a lot of it, especially more on the value add, it's finding somebody that really has the people and the team behind them. We've certainly, not a transaction that we sold, but we have seen in the marketplace where we've resold buildings and, the building shows up with us and it's got 50% vacancy. It's just, and, you're looking at that and you're saying, that's a more of an execution challenge. So we've definitely seen, we've also seen like, again, some, I remember early in my career, uh, one gentleman had bought a really large, I'd say about 140 units in the West Island, but in one of the tougher areas. And, this was an area where, and this is back in the day when people actually paid rent cash.
Okay.
And I think in the first 6 months, twice he had gone to get cash to collect the rents at the end of the month and had been robbed.
Jeez. Okay.
So, that rattled him and forced him to kind of like get out. But it goes back to he just, you know, he wasn't equipped to manage. So on paper, it looked great. It was really low rents, really cheap price per door, everything, again, what you're maybe looking for in real estate 101 classes, checked all the boxes. Again, I think, and again, not a building that I sold to him, a building that we subsequently sold on his behalf. I think they forgot to tell him that, by the way, it's a rough neighborhood. There have been robberies. You will,
Yeah, you need a tough guy on the team.
you may need to have measures for how you, collect. Less of a problem today, I
Yeah.
think, with everybody on e-transfers and whatnot. But now there are other things you have to be worried about, right? Whether it's the hacking or the ransom, the trickery. So
Well, like a big one I've seen was uh if your Interact password when you're accepting, it's the same for everyone.
right.
Everyone, like when I send you money,
Yeah.
I need to set a password that you're gonna accept. But if you as a landlord tell everyone, okay, make me the password Mark,
Yeah.
and you do that for everyone, someone's gonna realize if they get into your email, they
They
can
could
they can accept all that money and send it somewhere else.
yeah.
I've heard that happen recently.
Yeah, it wouldn't surprise me. And so I think there's a lot of, now it's, you have to be a lot more sophisticated in terms of, but it's a little bit of the same problems, right? Like, how are you managing all the cash flow? How are you tracking it? How are you ensuring you're safe and secure? And, again, we don't, like, that's not part of usually, or can be, but it's not usually part of a typical due diligence.
Yeah.
And so it goes back to, I think, you know, the success of an asset, or the success of the transaction really depends on who you sell it to.
Mhm.
And I think through the years, part of it is really finding the right profile of buyer. To your point, I wouldn't sell you a fully leased office building.
Mhm.
It's probably not what you're looking for.
No.
But if someone came around and said, "Look, I've got a very successful business. I'm not intending on, quitting or, selling the business, but we do have, surplus cash flow that we'd like to invest in something that's, going to produce cash flow, maintain value." You may look at, that's where something that's more stabilized,
Mhm.
less risk, where it'll make a lot of sense.
Mhm.
It's risk adjusted. You-
And so and you're trying to get the best price for your client. You're being mindful of the buyer by giving him the scenario that, makes a business case successful. But at the end of the day, if the buyer wins the bid and he's way ahead of everyone else, I mean, you're not gonna not sell it to,
No,
so does it ever happen that someone wins the bid, overpays and wins the bid, and then a few years later kinda has resentment because do they attach the transaction to you as the broker?
yeah. So um, I can think of one transaction where I do have a guy. He's like, every time I call him, he's like, the one call I wish I never answered.
Really?
Yeah. And we laugh about it. And, again, I think it was one of those things where market conditions.
What was the deal?
I won't say the exact deal, but it was an apartment deal.
Okay.
It was a value add.
Which area?
It was in the NDG area. And, it was something where I think 50% of the units had been turned.
Okay.
And so there was proof of concept.
Okay.
And I think if they had continued, and part of the proof of concept was really at the time, this goes back a few years, really what we call suite optimization. So this is before you couldn't merge units and you couldn't separate units.
Yeah.
So the idea was if you looked at it on a per square foot basis, the average unit in the building was, let's say, 1,300 square feet. And so the building, by today's standards, could have 120 units, but when we were selling it, it was only 70. So the game plan, as we had recommended and as we had shown as a bit of a proof of concept, or the seller had, was effectively you could take, the floors and go from 10 units to 15 units.
Subdivide.
Yeah, or combine a couple, make them 3 bedrooms, but there was a way to optimize the square footage.
Mm-hmm.
And that's not what the purchaser ultimately chose to do.
Okay.
They kind of looked at the concept, thought it was smart, but then thought they had a better idea, which they then tried to execute on, and regulations changed. And so all of a sudden, they, from what they're left with, they didn't end up with 120 doors. They bought what they thought was 70 doors. They finished at like only 85.
Oh, okay.
So from that perspective, it didn't work out.
Yeah.
But I think, part of it was their pivoting. They decided they would do more luxury high-end units.
Mm-hmm.
So maintain the same size. Instead of, re-optimizing the suite mix, they decided that the better approach would have been to just do more luxury. But again, this area of the island, in our opinion, was not
Yeah.
suitable for that.
Yeah. Yeah.
So, again, I think, like you said, like it's important to know what your downside risk is. You don't know when you get into the deal, if the plan's going to go exactly as you anticipated. And, the guys that we know that we've seen have been successful, typically, as I like to say, they have a lot of exits. So they'll look at it and say, well, if plan A doesn't work, or if it doesn't go in this direction, I can do this with the building. We can look at it from this perspective. And so that's where, in a lot of cases, we've seen some of our clients have tremendous success.
Mm-hmm.
We did one recently as an example, and it was quite talked about, but we had a big office building for sale
In Laval.
in Laval.
Yeah.
And I think that was an interesting process.
What's the call again?
Place Laval.
Place Laval. Yeah.
And I would say that was a really interesting process because, on paper, the way everybody initially looked at it was, what am I going to do with 900,000 square feet of office not in the prime sector of Laval?
Yeah.
And, again, when we started to underwrite it, one of the things that we noticed was that each of the towers was separately lotted, or, it wasn't one cadastre or, one lot, as they say. And so the opportunity really was not to think about it from 900,000 square feet of office, but to think about it from the sum of its parts. And our sense was, when we continued to tell everybody the same story, was if you could find someone, or if you could find a way to sell off parts of it, think of it as a private equity play where you buy the whole company, you sell off the pieces, and eventually either you end up with something free, or the overall price you paid for what you're left with makes it worth your while.
Mm-hmm.
And we had a lot of interest, and in the end, it really took. We had it tied up, and then it took one buyer who most people know now to really
It's Le Poirier.
Le Poirier. And I think what he understood was it wasn't about having a solution for the whole, but it was about the effectiveness of being able to trade out one component of the whole, and then from there you take it step by step.
So he traded out the lot that's
The land, yeah,
the land that's going to do resi. I think it's the
exactly, to
Octodep.
Octodep.
Yeah. Yeah.
And again, that was actually, our perspective was you could sell one of the office towers, you could perhaps look at one converting to a hotel operator. So it was really about the idea that there wasn't just one exit strategy. Like, it wasn't just, I need to lease up 900,000 square feet of office.
Mhm.
What else can I do with all of this?
And the office is half rented. What was this?
It'd be great to follow up, but from what I understand, I think, like, and that was the irony, is as we were closing, I think there was 40 or 50,000 square feet that was about to be leased up.
Okay.
So I think, there's probably still a lot of moving pieces. I don't think it was something that in 6 months was going to, turn around.
Mhm.
But through last conversations we've had with Luke, they're ahead of where they expected to be.
Somehow it looks like office is bouncing back, especially regionally where there's not that much options.
Yeah.
Like, I don't follow that market closely enough, but um, I get it when the floor plate's not too big. There's ways to transition in and out, but when it's a fat cake, don't you find that scary? Like, how is that going to play out?
Yeah, I think office is the most interesting sector right now. Like, if you look at it from a big picture perspective, and then, you want to kind of after that really dive into each asset individually. But from a big picture perspective, the trend of giving back space because we have less employees coming to the office is clearly not the trend. Like, that trend has passed.
Mhm.
And if you kind of look at it, a lot of those decisions were made probably in 2020, 21, and 22, where a lot of office tenants gave back space.
Mhm.
Well, those leases, 2020, 21, 22, they're all starting to come up for renewal.
Yeah.
And as they're coming up for renewal, a lot of the users are saying, we could use a little more space. Or we're thinking we're going to be bringing some more of our people back. And so we'll need more space. So I think we just released a report that showed that for the first time in 6 years, there was actually positive absorption. So there was more space leased than there was space given back. And that's the first time in 6 years. So I think we're at the early stages of the office market recovery. Um, so I think, now is the time to kind of look at, where are office values, and if the trend continues, that's where you'll start to see not only rent growth, but, the TI packages that are having, that you have to give won't be as substantial. Tenants will want more space. And it kind of is a trickle down. So your A class has fared very well. A
Mhm.
class is probably at about 96% occupancy, which will now push people to looking for other and alternative space. And then on the flip side, there's a lot of space that was taken offline. We did a couple of transactions in the office sector in the last couple of years that we converted. So the space was sold to be converted into student res or into other uses.
Like which ones, for example?
We did the one on St. Catherine Street where the police station is on the ground floor. And on the upstairs, it was mostly vacant office. It's
Mhm.
now converted to student res.
Okay.
And I think at about 85% leased up.
Okay.
So that was a great one. Again, it was nice to see somebody really be able to do a proof of concept.
Mondev, like a week or two ago, they bought, I think you had it, in Milex.
The Esplanade building.
Yeah.
I think that they're going to just keep his office.
Yeah, they're just gonna keep as is?
Yeah.
So they just got a good price per pound?
At the right price. Yeah. And again, I think the trend is now tenants are out there looking for space. And, that was the kind of challenge over the last 2, 3 years. We were still in a trend where some tenants were giving back space.
Yeah.
I think today it's relatively safe to say that tenants are not giving back space, if anything, renewing for the same size or renewing and looking for more space. And as an owner, that's a good time, right, to be in that space.
What do you think is gonna happen with the Air Transat tower?
Um, I've heard a lot. So I think that's close to transacting.
Yeah.
I've heard some rumors that they may convert some of the space,
Mhm.
but I feel like, and I don't know the building well enough, but it feels like large floor plate.
Huge. 15,000 square feet.
Yeah, that's usually not conducive
No,
to.
to carve out or do an atrium.
Yeah, so it'll be interesting to see.
Yeah.
I mean, certainly though, from a location perspective, unobstructed views to the mountain,
Mhm.
you're very close to Jean Mals Park. I would say from a residential perspective, it makes absolute sense.
Mhm.
From an execution perspective, Probably, so, I don't know that we would have been marketing it for that purpose. I think again, if there's a way, to convert that to more boutique-y office or, office where someone wants to be more in the plateau area, I could see that.
Mhm.
So that would be my suggestion.
I'm not sure I know the answer, that's why I'm asking, so it might be an obvious one, but, like, what's your sweet spot of things that you could sell?
So I'd say Montreal, by and large, is a value add market.
Mhm.
So anything, so there's twofold. I think anything with value add opportunity where, the building is slightly underperforming and we have a lot of entrepreneurs in this market, like you,
Yeah.
who are looking to, roll up their sleeves, create value, want to do active management.
Mhm.
Um, you know, so I think a lot of buildings like that, we find good depth of market, like a lot of groups, a lot of investors, sweet spot, probably 5 to 50 million
Mhm.
in Montreal. Larger size deals, you'll find less groups. I think it's also the financeability of it will make a difference, but that would be and particularly multifamily,
Yeah.
which again, I think we are the largest multi-residential market in all of Canada in terms of, apartment buildings, number of apartment buildings, number of renters. So it kind of makes sense.
Mhm.
We have, and we have all kinds, whether it's 20 uniters, 30 uniters. I think in other markets, some of those are harder to find.
Yeah.
Um, so I think it's a market with a lot of product
Mhm.
that's very liquid, but value add. I think where we see, not to say less interest, but where we don't see it clear as quickly would be, someone coming to us and saying, "I just renovated every unit. Everybody's paying 3,000 a month,
Yeah.
and I want 400 a door." You
Yeah.
know, and unless that is something that is going to be of institutional quality, and something that could trade to a pension fund, a REIT, or a life insurance company, trying to sell that to PJ here, he's
No, no chance.
not a 400 a door guy, huh?
Oh. At
So,
200, I start wincing.
hmm, exactly. And you know what? Again, I think, but it's just a different operation,
Yeah.
right? Like I think for that type of product, you got to find someone whose cost of capital is low.
Mhm.
Someone that's really looking for capital preservation knows that, they don't have to put a lot of CapEx. They're not going to need to go in and redo the roof, the balconies, every riser, every electrical panel. And, the cash flow that they get from the building is going to go directly into their pocket.
So that link is the link you guys have strong relationships with all the institutional money coming in from Toronto
Yeah.
mainly. Is it because they're less active in buying in Montreal right now?
Yeah. Well, I would say I'm trying to think, I would say from 2015 to 2019, almost to 2020, maybe 2021, all the way through. I think we systematically institutionalized the multifamily space. We
Mhm.
probably sold, if I had to guess, at least 10,000 units to, it could be Achilles, Cap REIT, Interrent, to some of the largest institutional owners across the country, a couple of the life insurance companies. And I would say the trend over the last 5 years, so kind of since 2021, 22, a lot of that has been kind of traded from institutional clients back to the private sector.
Mhm.
And I think a lot of that has to do with just the overall age of some of the assets
Yeah.
that will require, significant capital improvements. And again, I think if I owned 60,000 units across the country, if you think about how many years would it take to renovate every single unit,
Yeah.
you could, you know, it could be 50 years. So,
At one point also those firms to me, there's also like a marketing aspect to it. Like a great deal might be great on paper for the value add, but for a cap read, it's not sexy to tell your investors, hey, we bought another 70s vintage in the East End.
Well, you
It's
got
much,
60,000 of them.
yeah. But so it's much sexier saying, hey, we just bought these new things in Laval. We bought this thing called Saint Luc. Like, even though there might be overpaying, I think it's kind of like they want to show the pivot that they're, hedging for the future. And I think it's a lot of PR.
Yeah, I mean, it definitely, not to say that it's PR, but from their perspective, again, you're absolutely right. Adding another 70 doors when you already have 10,000 units that are from 1970 and are 50 years old,
Mm,
you know, you still have 10,000 units that you could renovate and could bring rents to market and could create value. So at a certain point, you want to balance a portfolio where you do have cash flowing, generating strong, cash on cash returns that you can then use to go and renovate your
mhm.
value add program.
Yeah,
So, I think it's just putting together the right portfolio. I don't, think certainly you would want to end up with 60,000 doors that you have to renovate.
mhm.
At a certain point, you won't have the team for it. And, it's just
The army of rental guys.
the army of rental guys, right? So, at a certain point, you have to look at the portfolio and say, we've got enough units that for the next 5 years, we're going to be turning, 50 units every year. So, we've got our pipeline, we've got our value creation,
Mhm,
we still have capital that we want to deploy. And can we deploy that capital and generate, cash on cash?
mhm.
And so when you look at a newer build, you're not going to have to change the elevators. You're not going to change the roof. So, the cash flow at the end of the year is going to go directly, into the shareholders.
For sure, that's something that I'm interested in when I'm getting into the more expensive per unit costs is who's the vendor. And if the vendor, when I meet them, I can tell that they're someone who's diligent and takes care of their things, like an institutional. In my mind, the bones are going to be, cleaner.
Yeah.
But is that true in your opinion? You've seen so many vendors come in. Do they actually take more care of their units, or it's just the same? Delay and pray.
No, so I will say what is as you deal with some of the larger landlords, what you do find is their um, operations are compartmentalized.
Mhm.
And so what we do notice as a bit of a trend is for larger operators, if there's a capital program that's required to the building, they will do it.
Okay.
They will not necessarily tie it to their leasing program. They have a, capital group that focuses on what needs to be done on the buildings. They establish budgets and then they work to, kind of chip away at the work that needs to be done in the building.
Mhm.
And where that can become very interesting again, in some of the recent sales we've done is that, here's a building that's gone through $4 or $5 million of capital programs, but at the same time, they haven't yet renovated the interiors of the buildings.
Yeah. That's
And
that's what I like.
yes, but again, it just because the departments are compartmentalized, and one division is responsible for the maintenance, repairs, and capital improvements, and another group is responsible for the leasing and the operations on the leasing front. So it's just the programs are run
Independently, which
independently.
is amazing. Because even if they're getting their ass handed to them on leasing, they're still spending to
There's
improve
the
the
manager.
HVAC.
Yeah.
So, switching gears, because when we talk about those deals that didn't go too well, we don't really wanna name anything. Can you think of anyone that you sold 15, 20 years ago, and they were there back then, and they're still crushing it today?
That's successful?
Yeah.
Yeah, I mean, I can think of quite a few. Um, I'd say, again, the one in particular, like, anecdotal story to kinda, about that is, the 2 things I would say is that groups that listen. So I would say, again, going back to it, you can have conviction, you can have your way of seeing things, but I think the ability to kind of listen and use your creativity is where I've seen some people really hit it out of the park. One story that I can think of from like 10, 15 years ago, we had um, we had a couple of buildings side by side, about I think it was 4 buildings side by side, semi-commercial. So a little commercial unit on the ground floor, 5 or 6 apartments above, and we happened to have 4 or 5 of them in a row, all on the same street. And, we put it on the market. Everyone we called and spoke to, the first reaction was, seems like an aggressive cap rate. It was all cap rate, cap rate, cap rate. And, which arguably there was a vacancy in the commercial unit and so on and so forth. And, one of the buyers we started talking to, his question was, what's the price per square foot? I said, well, like it's $100 a square foot. And so I said, like, it's not really a cap rate play. It's on a price per square foot. And again, in talking it through, it was, we realized that each of the buildings could be sold separately. But our vendor didn't want to do that. Because at one point he said, look, why don't I buy the 2 that are fully leased? And the vendor was like, no. So through the conversation, we did end up convincing this one person. She said, you know what? Why not? Let's tie it all up. Let's see where it goes. And anecdotally, they were working on another file, and in that they met a broker, and the broker happened to mention, I'm looking for my own. I want to buy a building, and I want to open my office and put my office in the building.
Okay.
And he kind of said, well, I just happened to pick up a couple buildings. Maybe I'll sell you one, the one with the vacancy. And so before we got to closing, he had ended up through that broker selling all 4 of the buildings. Broker brought one. He brought 2 other clients to buy the other 2, and then a dentist bought the 3rd one. And I think he walked out with $1.5 million check.
Nice. So he arbitraged it during the due deal.
Yeah.
That's crazy.
And all what he did was just kind of listen and didn't focus on a metric, right? And tried to understand what the deal was. And I think that's kind of it, is that, I think at the right price, there's an opportunity to make money in real estate on any type of deal. It's finding what the right price is, and not every deal is a cap rate play. Every deal has its intricacies, and then it comes down to, is it something you want to take on? Sometimes I've seen people buy deals because they thought it was a great opportunity, super cheap. You could buy it with no cash down, and then 3 years later, they're still stuck in the deal.
Mhm.
Or 5 years later, they're still stuck in the deal. And we've had a few of those where, it just, the metrics made it look really good. Cash on cash, $100,000 down payment, and they could buy the building, and, you know, there's no out.
Yeah. Well, if it's a CMHC loan that's in place, eh, like it's the best it's ever going to be.
Yeah.
So your down payment is just stuck there, and then most likely the rents are already at the top there, either capped by affordability or by just the market. So yeah, that's definitely less exits, like you said.
Yeah. We had a listing not too long ago where, we looked at it and we were like, there is not a lot of value, so to speak, or even us underwriting, we're like, this is pretty, but the most attractive thing was, I think you needed 300,000 to buy 30 doors.
Yeah, yeah. I think it's a receivership deal, 2 buildings,
Yeah.
downtown and NDG.
Yeah. And when you looked at that, it was like, why will someone look at this? Just because it's easy to buy.
Yeah.
And was that guaranteeing that is that how you're gonna be successful?
Mhm.
TBD. But again, it gives you an example of where, if it's not necessarily the performance of the asset, is that really the reason to be buying something?
Yeah. So do you have like memories of back then, young Mark doing his first transactions, and then some of those buyers are still 15, 20 years later, like you're still transacting with them, they've kind of grown their organization?
Yeah, I think through the years, there's probably 4 or 5, maybe a little more, even yourself included, where I think we were fortunate to do some of the first deals that the group or the organization kinda got off the ground with.
Yeah.
I'd say almost all of them are still active. Um, and, again, I think what we saw, I've always, what you realize is you can see from the get-go that the person is committed. So there's a few groups that'll come to us and say, I remember we did my first or second transaction was with you guys, and I'm grateful for that. And on the flip side, it's also like it didn't feel like a risk for us. You know what I mean? Like in working with a buyer, we knew they were going to be able to execute, and execution starts at being able to buy.
Mm-hmm.
Right? A lot of people can make. I've met a lot of people through this that make offers, and it's 700 offers, and they buy 2 buildings. I'm not necessarily sure that that's,
It takes a long time to do all those offers.
yeah. And I'm not necessarily sure that of the 700 you wrote and the 2 that you got were really the ones that you're going to have a ton of success at.
Yeah.
And so again, it goes back to you. We like to think of ourselves, as advisors, try to find, the right person to take over to be the steward of the asset. And, thankfully, I could say like we're selling one today. We should be very close in a couple of weeks where I think we sold it to the current owner. I want to say in 2017. And, it's amazing. I look back at the underwriting that we did then, and, the rents then were 650 a month. And
What type of asset is it?
multifamily, it was
Okay.
about 250 doors.
Okay.
And, we underwrote that, rents would grow by 1%.
2017 to now, they
Yeah. And,
more than double.
yeah, yeah. And, I think it was really interesting to see that in our 10-year pro forma, and I'm pretty sure if I would have looked at it then and I had said the revenues were 2.5 million and they would get to 5 million in 10 years. I'm pretty sure when I looked at it then, I was like, oh, this'll never happen. And, sure enough, by year 8, when they came back and showed us their pro forma, they were at the 5 million of revenues and a double the revenues in 8 years. And I think today we'll sell it, for double what they paid. So, from 20 million, it'll sell for just north of 40 million. So it's pretty interesting to see when what you underwrote and who you sold it to have them come back and see.
And it's being sold for double what they paid. Do you still think there's value to be gained? Like, is it fully optimized, or is there
Based
still
on
money on?
no, and again, like now the rents are 900 and change, which
Yeah.
again in today's market feels cheap.
Yeah, because I was gonna say if it's 200, you said 250,
Yeah,
and you think it's gonna go for 40, there's juice there.
here's juice.
Yeah.
Yeah.
So what's the trait? Like, I know like everyone's committed, but like you meet so many people. Like, I'm impressed. I've just started going to like these conferences and all that. I'm impressed by like the stamina that you have, and I see all your guys. Like, you guys are at every event,
Yep.
meeting people. So at this point, you've transacted 900. You've probably met 5,000 people.
Yeah.
What's the trait when you see someone who's not already like a known factor in the market? How do you know they're going to succeed?
Commitment. Look, you're at a certain point, if you're starting in this, the one thing I would say you have that someone who's got a portfolio of 3,000, you probably have time. You have time to work on 30 doors. You have time to lease up 20,000 square feet. Whereas again, a big organization releasing 2,500 square feet might not move the needle. Again, getting at the last unit and raising the rents or, improving that last suite. If you've got 2,000 and you're doing 100 a year, you're not necessarily getting to that 110. Whereas if you're starting, you have the ability to say, you know what, if I've got 40 doors, I'm going to work all 40. I'm going to make sure I achieve. Or if I need to improve 20,000 square feet, of office space, and I'm going to so I think it's really finding someone that at that as they're starting is they're really willing to roll up their sleeves and hustle.
Mhm.
And I think that's the difference is like we'll meet someone and they'll act like they're again at a higher level or that like they don't have the time or the interest in doing the leasing, the turnaround, but they don't have the team or so that's where there's a mismatch.
Yeah. So if you don't have a team, you're not willing to do the plumbing, or the plumbing, I mean, of like value, adding value, then probably is not going to work out.
No.
Yeah.
At a while, like, and again, on the flip side, like, I wouldn't, like, it's not gonna pay to sell 30 doors to someone that owns 30,000. They're never gonna get to it. They're never gonna create value. So there's a mismatch there. So if you're asking me if we're looking at someone who comes to our office and says, "I want to get into real estate. I'm hungry. I'm committed. I want to do my first deal." We're not gonna sell them a 3,000 unit portfolio or 3 million square feet, or a Placerville Marie, right? Like they wouldn't have the operations to collect the rent. Imagine trying to collect the rent at Placerville Marie. Like, it's just,
I'd love to work with Basil Murray.
but you're gonna, but at the same time, if you find somebody that's really willing to go in and knock on doors, that's the right. So again, in my opinion, it's a match. You got to find the right profile.
Okay. Along the way, I've realized that a lot of owners are not going to identify or even want to verbalize, hey, I have a troubled asset. I need someone to come in and fix it. What they may say, though, is, I don't like my property manager. I want to change him.
Yeah.
And property management is very passive, as you know. You collect the rent, you fix the lights, but it's such a low fee business that it's a volume play. And so you need tens of thousands of units to even have a business there.
Yep.
So I've started to have some property management contracts where they only come to me because they've heard that we can add value. And then I basically look at the pro forma and I tell them, like, listen, this is more of a passive property management. Market fees, this is what we charge. It's super comparable. However, one of these in your portfolio, I think we can double the revenues over 2 years. And here's our fee structure to get that,
Yeah.
because it's more of an active play. And so that's how I've been growing the practice in Quebec, because in the US, I work also on mandates. And in the US, they're much more upfront with, we have a problem, we need to reprice, we need to face reality, we need to invest.
Yeah.
Somehow in Canada, it seems to be a little bit more conservative, a little bit more of extend and pray. So I come in a little bit more like a Trojan horse, where I'm just here to be your property manager. And then once we start talking, they kind of realize, like, oh, you're not like our regular property manager. Because I show up with, like, here's the pro forma I think we should get.
Yeah.
I'm looking at it a little bit more like an asset manager, a little bit more like they want to get to a disposition.
Yep.
And or a liquidity event, a refi. And so I tell them, like, hey, you're gonna sell this building in the current state, you're gonna get pennies on the dollar, but if we optimize it, then we can hand it over to, a capital markets team, and you're gonna get full
Oh
value.
yeah, yeah,
So that's really where I'm focused on is, as my investment practice grows and, we're turning around our deals, there's a limit to the size of the team you can get. As the deals get bigger, the team will get bigger. But if my service offering of third party, turnarounds and property management grows, my team can grow out.
Yep.
And the bigger the team, the better I do on both sides.
Yep.
So that's really kind of where I'm headed. And it's kind of a funny position to be in, because as a service provider, I need to give timely reporting. It's more family office,
Yep.
small institutional or large institutional in the case of Toronto. So the reporting and the way that, you present yourself is much more tied to a corporate environment. And yet the reason they want to work with us is because of
You're nimble.
nimble, the cowboy,
Yep.
creating value. So I was just curious, like, do you think that makes sense?
Yeah, I would say the probably biggest pain point for almost all owners is going to be property management and the day-to-day operations. And I would even say that one trend that I'm seeing in the marketplace is, and it goes back to success or failure. I think it's fun doing the deal. Capital markets is fun. The day-to-day operations is kind of mundane.
Yeah.
And so I think you see a lot of announcements about deals getting done, about sales, about flipping, about how, groups have hit sky high returns. But you don't often hear about now that they own 4,000 doors or now that they own 2 million square feet, how are they managing it from a day-to-day perspective? And, there's some owners that we've seen through the years that I've seen through the years that have gone on long runs. They've bought 20 buildings in a row. And there's always that point where it's like, it's not sustainable. Someone's going to eventually have to create the value, work the properties, and so on. And, I think more and more people are looking for, whether you want to say a hired gun or looking for someone that they can scale up that ability. So, going into the property management like you're doing, I think is a service that will be in more and more demand as, and we're seeing the trend. Companies are more and more looking to outsource that. Um, and, part of it is so that they can scale it because, at a certain point, you do have properties that need turnaround, need more attention. And then you have others that just need the day-to-day operations. And so it's that ability to scale your property management. But I think it's the biggest part of success. Going back to finding the right profile of buyer, a lot of it means what's their ability to execute, how will they manage, the property. So, I would say if you're building a team that has that capability that you can really go in hands-on and optimize buildings, whether that's for your own personal investments or whether that's going to be for other groups, I think that will be, not only is it in demand now, but it will continue to be in demand. And I think it's something that's more and more in need.
I was gonna say, your team is pretty much at any given time ready to be professional athletes and or models. Like, everyone on Mark's team was like a pro hockey player, pro basketball player. Like, they're all 6'3", and they look like they're ready for an ad. Like,
Except me, I'm the short
yeah,
guy.
you're the only short guy in the whole thing.
That's why I had to start the team and not, or else they wouldn't have hired me.
But I'm like, do you look for athletes when you're hiring?
No, not at all. A lot of it is, a lot of it was a little bit of happenstance. There's certainly, they will say in brokerage, generally speaking, a lot of, and it is a trend, a lot of the people that were successful in brokerage came from sports background.
Yeah.
Some of the theory is just, the ability to do the same routine day in, day out, that discipline,
Eat what you kill.
eat what you kill. Um, I would tell you on our team, what we like, and again, there's a lot of people that I've worked with that are, no longer with me on the team or came to, started working with and then they moved on, career choices. A few of them had personal situations. Um, I think the one thing I can say where there is a parallel with sports is, it restarts every season. Right? Like at this, whether it's at the start of the year or whatnot, once the deal is done, once the game is over, whether you won or lost, you have to play the next game.
You can't coast. You gotta hustle every shift.
No, you gotta, yeah. And so, you close a deal, it doesn't guarantee the next deal closes. And, you have to kind of get out and work again. And, sometimes, and, I think the most fascinating thing, just to kind of go on the rant, like, what I'm realizing more and more is that, the opportunity sometimes that looks like a loss today, actually, I look back 2 years later and I'm like, "Oh, yeah, I met them working on this. It didn't work out on that transaction, but we ended up working on something else together that went way better." And I was thinking about that recently because it was a recent transaction that, we were working on, and I was like, it turned out that it wasn't a successful transaction. Like, the buyer didn't lift his conditions or whatnot, and the buyer didn't go through with the transaction. And then, a year later, we're now selling a building twice as large, with the same seller who, and now the buyer has bought two other buildings from us. So, I think there's no, I don't look at it anymore as this deal or that deal. It's really kind of the relationship behind it. I think that's taken time to get to that level, but you realize, like, it's not about just this deal. Like, we're talking about a deal in the East End. Whether that one succeeds or not, the conversation we have through that may lead to another transaction happening, right?
That actually, sorry to cut you off.
Yeah, no, no, no.
Selfishly, I'm good. I like math. I like numbers. So You've been doing this 25 years, more or less.
more or less.
You're at 900 transactions, more or less. That's 40 transactions a year.
Yeah.
You have a family, you have kids. You're taking some days off, some weeks off. You're pretty much closing once a week.
Yeah.
For 25 years.
Yeah.
How do you keep up?
When you say it like that, I never thought about it. Um, you know, the how do I keep up? So I learned early on what I figured out. What I learned early on in this business was I didn't have like the I prioritize the family, the kids, and my time, and then I'm available for clients every other time. So I made sure that I took care of, if I could say, myself and my family first. But you know what? If we need to speak on a Sunday and it's not over dinner with my kids, I'm happy to take the call. And, two things that stuck with me early on in this career that, still to this day, I always like to tell. I remember meeting a client a long time ago, one of the first, and I was getting into the business and, I was learning, and he said something that was so impactful. And he said, I never lie. I always tell the truth. Nobody believes me anyways. And I realized, in my role, I didn't have to, that always stuck with me because it's for you to decide. I can tell you what I think of the building, why I think it's a good opportunity for you. You'll make your decision.
Mhm.
And, you didn't have to like embellish it or, create some wishy-washy thing. So that was one thing that stuck. And then speaking to someone else who was much more senior in the industry, and not in brokerage, but a lawyer. And this one also stuck with me where he said, there's no such thing as the best legal contract. Any lawyer that tells you they're going to write the best contract in the world it's not, it's not really possible. He said, so why does the client need me? It's because when there's a problem, I'm available and I'm responsive.
Mhm.
And, I think that's the truth. Like whether we're really the best and going to get you the absolute best price. And, a lot of that is circumstance, the building's in good shape, the market is right, all of these things. But I think what we are there for is we will be super responsive. We have a lot of experience. So we've seen, in a lot of cases, we've seen things, different scenarios. So we're kind of there to kind of guide when there's things that don't go as expected. And then the last thing I always tell my team is we need to be ultra communicative. Like I think the toughest thing people have is calling a client, speaking to a client when there's nothing to say.
Mhm.
But sometimes that's what the client wants to hear, right? Like you have third party property management. You know what? If there were no visits to the property this week, sometimes in experience, you don't want to call, you don't want to report nothing. But what I've learned over time is that clients would rather you just
Know that you're still alive.
pick up the phone and just say, hey, hey, Frank, just to let you know, obviously it's the summer, it's holidays, it's a little slow. Here's the things that we did this week. We're still active, we're still here. Anything you want to talk about, any ideas you have. And I think that's where you'll gain clients' trust over time.
Do you have some sort of a hack or a tip that you've done over time? Like I've noticed with me, I've noticed that the more experience folks get, that they're very transactional. Emails get shorter, they get
Yeah.
to the point. And so I've got a fair share of emails from you where it's just one liner, hey, are we still on with this?
Yeah.
And you're keeping up. Is there like a methodology? Do you start up your day and is it like all in your head? Because if you're closing a deal a week, you're probably talking to two potentials and you're doing that stacking it year over year. Like the inner Mark CRM is pretty hectic.
I think and you're probably just as busy as I am. You get good at knowing when you need to be present and when you need to intervene and when I don't need to call a lawyer 20 times in a week. I think when I was maybe younger, where's the document, let's call. Now you let people do their job.
Mhm.
and you know when to intervene. Again, I go back to I like to adhere to being super responsive. So if you call me, I think if you guys reach out to me, I'll usually respond relatively quickly, or
Yeah.
someone on my team will.
Yeah.
And then I always insisted, like, if you're a client of ours, make sure we're communicating. You know, we want our clients to feel like we're working for them. Um, you know, I don't think you'll ever hear, hopefully, from us that like, oh, sorry, we're busy working on another client.
Yeah. No, that would not be good.
We never say that. I'm sure you're the same way. You'll never tell a client, oh, I'm sorry, I got to take care of this other client.
Yeah.
And I think you see that in the beginning when people are inexperienced, or when, you know, they're figuring out how to manage it all. But you know, I just look at it from the perspective of how would I want to be treated as a client. Um, and I've had my experiences where, you know, sometimes even, you know, you can't do something for a client, and it goes back to that, you know, be honest, even if it's not what the client wants to hear, tell them, you know, what, you know, it is. And I would tell you the one other thing that more and more we're beginning to realize is it's easy as a broker to just do what the client wants.
Hmm.
And maybe sometimes you see that where client has unrealistic expectations, client has unrealistic timelines, and you feel like if you're the one that says yes, you know, you'll get the business. We know it's competitive, people have options, they can go to other shops. Um, but I think you have to know how to balance that.
Push back gently.
Yeah, and, you know, not just push back, but why is what the client asking for the right thing or not? And, you know, I can go back to how we started this. I want you guys to just, you know, can you guys list it next week? Well, we can list it next week. We could certainly take a picture, put the address, and stick it out in the internet, as they say. But is that really how you sell a $80 million building?
No.
Right? Or do you craft, how do you position the asset? You know, what are the financials? What's the zoning? What other potentials are there? What's the long-term plans for the neighborhood? You know, what's happening in the competing buildings? What kind of financing can you get on the building? So we can absolutely just list something, and we could tell the client, no problem, we'll be on the market next week. Or we could say to the client, look, I think if we're really going to hit the value you're looking for, and, you know, achieve, you know, an optimal sale, a smooth sale, no turbulence. We're not going to end up, you know, on our third buyer, or, you know, in a 6-month due diligence. Let's figure a lot of this stuff out. You know, let's make sure we're not missing value. Like we didn't miss an easy opportunity. Like you can, you know, the site is underutilized. You know, there's excess land that we could sell off for some, you know, easy value piece. And then let's find out, like, if we're a buyer, like, can I get financing?
Hmm.
Going back to our earlier discussion, you know, if a property's easy to buy because the financing is really favorable, you know, let's make sure we're aware of it. So, and conversely, we may find out that like it's got a lot of hair,
Yeah.
right? And you know, I always tell our sellers, I said the last thing we want is someone to know more about our building or the property we're selling than you know.
Yeah. You don't want to come in finding out stuff.
Yeah.
That's my biggest annoyance is when I start finding out things and I wasn't told, suddenly the trust,
Erodes.
everything the person told me as a buyer, I'm like, okay, so it was just marketing. Like it's not true. It's funny also, you said earlier, like asking the why.
Yeah.
We just completed a transaction a week and a half ago, and no broker involved, so direct with the vendor who had a lawyer representing her, but the lawyer was not, you know, the most knowledgeable commercial real estate person, and huge timeline on meeting end of January. You know, like the whole world was gonna stop end of January.
Some kind of year end reason, tax thing, whatever the story.
We assumed, instead of actually asking why, we assumed, and so we lined everyone up, everyone was aware of the financing, and then as we're in Whistler, uh, bad news happens. The lender isn't working out, so we need to find alternative
Yeah.
solutions with a private lender, so more expensive money, to meet the deadline. And then, you know, you're pushing on everyone, notary, legal, financing, you're pushing on everyone to meet, to close on the date. We get to the notary closing, and the vendor's, older lady. And then she shows up, and finally, it was very hard to get her to take her car and come. Finally shows up, and she tells us as we're signing everything that in the end, the reason why she needed it then was because her insurance policy had come up, and that she didn't want to pay an extra month of
The insurance policy.
insurance policy. And so, because when we're taking over, our insurance policy needs to be on, right? Uh, I just, we were waiting for one of the parties to show up. I called our insurance broker and I asked him what would be the cost to just extend and just for fun for next time. And it was like a few $100s. And so all of this stress and aggravation and a more expensive capital, all for something that could have been just avoided if we had asked why.
Yeah.
And that was like a huge learning for me. I was like, okay, I'm not just going to take the condition for the sale as something that's immovable.
Yeah.
I'm going to go have coffee with whoever, and I'm going to keep asking why until I find out that we're talking about a few $100.
And again, I think, not to throw the lawyer under the bus, but again, as the advisor, they should have asked the why. It's why do you need this closed so quickly? Sounds like we've got a serious buyer. He's lining up everything, doing all the right things. Like, what's the reason? And
I think they knew, they just didn't want to tell me. Like, they're
yeah,
representing the vendor. She wants it now, push, push, push. But I don't know.
but in my opinion, it put the deal more at risk
Yeah.
than just saying, look, it's a couple hundred extra bucks. Why don't we get the buyer to pony it up, or like,
Yeah. I would have
you know,
covered it. No
he'll
problem.
renew the insurance and then he'll pay if there's a premium to cancel, and that's the end of it.
Yeah.
I think again it goes back to there are like, we're there to help find solutions. I think I'd like to say we would have asked those questions and guided the vendor in a way as to not put undue pressure.
Mhm.
We had a legitimate one where I'll give you an example. We got a call on a file, and the vendor's like, "Listen, I need to do this transaction in two separate transactions, and the reason is for tax purposes." And at first, I was like, "Hmm, really? This is a thing?" And we called the purchaser. We said, "Look, we just need to split it." He's like, "Well, my financing's tied. It's going to be complicated." And then, I went through the trouble. I called my account. I said, like, if he splits the transaction, is there a tax benefit? And it's like, from this perspective, yes, it'll allow him to clear his dividend account or something. I was like, I called back the purchaser. I said, look, it's legitimate. Like, it's going to cost him 300,000-400,000 in extra tax if we don't split the transaction. So we worked out a compensation. The purchaser comes back and says, I need to do it before my fiscal year so that I can do the interest deduction. So we need to do it between this and this date. But again, we asked the question, and if we felt the vendor was insisting on something that was of no benefit, we would have, as we did in the beginning, initially slightly pushed back. Then we turned around and we realized it was material, and we explained to the person, we said, look, we're not like, why pay the government more? Like, that's not the business here, right? Like, and I think the purchaser understood that. They're not here to put undue tax burden. So in the end, it worked out for everybody.
Mhm.
But we wouldn't have pushed someone to do something unnecessarily.
Yeah.
And
When we spoke earlier, you told us, I think it was your 20th edition of going out to Whistler.
yeah.
So as someone who's now maybe not the youngest person in the room, and kind of like stewarding a younger team that you guys are absolutely crushing it, what's the next 10 years of the Mark Sinnett story? Oof, or the Avison story?
Yeah. Look, I think, and thank you for bringing the Avison component to it. Like, it's, I think, seeing the potential of what this team can do. And I would go beyond when I say this team, like the Avison Young, the office at Avison Young has been in Montreal for, I think, since 1999 from memory. So it had been around for 20 years, but was 12, 15 employees or staff until about 2021. And then in 2021, they acquired Devoncore,
Yeah.
which was one of the largest and one of the first commercial brokerage firms, before Colliers, CBRE, JLL was even in Montreal, quite a bit before, like a good 20 years. And, that happened in 21. Then we joined in 23. And in last year, we had an industrial team join us. And I think what's really impressive is in that span of 5 years, from 2021 till, last year, 2025, the office has gone from about 12, 15 employees to I think we're well over 100 employees now.
Wow.
And now we have, we have, I would say, best in class tenant rep group, best in class agency, best in class capital markets. So apart from just seeing what our team can do, it's really exciting times to see what this office can do in terms of servicing, the commercial real estate industry. And then just the implication in the community, whether it's with the university programs like HEC. So I think, the next 10 years for where we are and, the organization that we're with are very promising. And I think it's going to be very interesting to see, how that evolves. And, part of the reason we were excited to join with Avison Young as we did 2 years ago was, again, I think we understood we were in a unique position. We're uh, a fortunate group. We've all, I've worked with most of the senior team members, as like Sebastian and Yan and MC. We've all worked together for more than a decade.
Yeah.
I don't think you have that elsewhere. So we have both the combination of seniority, but at the same time, we're not um, close to retiring.
Yeah. Yeah. You guys are still pumping.
Yeah. So, I think that combination is, kind of fun.
Yeah.
Yeah, work is fun. We all enjoy it. We all get along.
Can I make a prediction?
Yeah.
I'm more and more taking my car and going in regional outside of Montreal.
Yeah.
And I really think you guys should and will hopefully expand outside of Montreal
We are.
because there's a lot of inventory. It makes sense.
Yeah.
Montreal is very, very competitive, and you go 1 or 2 or 3 hours in any direction, and there's great opportunities, but there isn't any cold shower for all the vendors that I'm meeting. So I need you guys to go out as the
And
big
educate them.
Montreal, Quebec team, turn on the cold water and get them into prices that would move.
Yeah.
And I think that's like the natural next move, especially because of your core, which is value add and
Yeah.
opportunistic. I feel like that's naturally what's going to happen.
We definitely, we see the whole province, and I would even go to the extent of saying Eastern Canada as really where we'd like to grow into, to your
Yeah.
point. Yeah, and I mean, we're looking at doing stuff now more in Gatineau, Quebec City, some of the smaller markets like Sherbrooke, Three Rivers. They're all, generally speaking, the assets are performing well there. And to your point, I think there's a generational situation where there's groups that built and developed a lot of the real estate, small families in those markets, and not necessarily the family's going to take over. So you're absolutely right. It's, you know, we hope to be doing more and more transactions. And I think looking in those markets as someone who's, going to find good value,
Mm-hmm.
and you can get stabilized assets out there.
Yeah.
We've talked to clients, they'll buy in Drummondville and, great cash flowing, and they're starting with, lots of opportunity.
Yeah. Thanks so much for
Yeah.
coming.
Thank you.
Can we do this again?
Anytime.